Well, you know, Kelly, tax filing season starts on Monday, and last year's trading frenzy over meme stocks like AMC and GameStop could have an unexpected impact on tax returns for some new investors. Take AMC. Its sharp rise and fall early last year made it one of the meme stocks of the moment. It became the top holding for Gen Z investors and finished the year in third place behind Tesla and Apple on Apex FinTech Solutions' top 100 list for investors ages 24 and younger.
In most cases, it was a buy and hold. I think in some cases, they actually added to the position, really smart, as this thing was climbing. And then in some cases, some folks took profits before the end of the year.
New investors who took profits in AMC and other stocks need to know how they'll be taxed on these investments. Short-term gains from stocks held for 1 year or less before being sold are subject to ordinary income tax rates. Long-term gains from stocks held more than 1 year will be taxed at 0, 15, or 20%. A net capital gain is considered income, and an increase in income could reduce certain tax breaks.
Student loan interest, child tax credits, deduction for medical expenses. These things are all tied to your adjusted gross income.
The higher your adjusted gross income, the fewer tax breaks you may be eligible to get, Kelly.
Well, and we're talking about kind of if you've had gains. What about if you've had losses? What should you do tax-wise?
Well, you need to know the tax impact there as well. And investors with more losing stocks than winners can deduct up to $3,000 against their regular income. Now, if your net capital loss for 2021 is more than that limit, you can carry the loss forward to future years.
The full amount?
You can carry the lot, yes. Every year, use that $3,000. If you have a lot, you may take several years to exhaust that, but you can't use it against your gains. Yes.
Interesting. You could use that for decades. All right. So it's great to make profits. That's what happens if you have losses. Is there a longer-term tax impact from trading that new investors should be aware of?
Well, one of the things that you should know is if you have significant gains, then that factors into your income, and that is what is used to determine your estimated tax for the next year. So if you have had significant gains in 2021, your estimated taxes for 2022 could be higher also. And so that's something that you need to consider, tax experts tell me.
All right, Sharon, thank you. It's great to see you. Our Sharon Epperson.